Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. The saga of Warner Brothers Discovery continues. Paramount Skydance is in there taking a $30 all-cash offer that they presented to management to investors, claiming it's a better deal for investors. And that's really why the stock is up this morning. Netflix stock is down about 3.5%, actually below the collar of the Warner Brothers Discovery offer, which means that the $450 in cash is worth slightly less than $450 right now. And then Paramount Skydance is up about 4%. One thing to remember within this new offer is that Netflix has a hard time walking away from this deal because they have a $5.8 billion, I think, breakup fee in there in the agreement. On the other side, Warner Brothers Discovery also has a $2.8-ish billion breakup fee if they choose another offer over Netflix. So that's one thing to keep in mind as well as you think about the Paramount Skydance offer now that the Netflix offer has been accepted. So what are our friends at Paramount actually offering? Well, it's a simpler offer for sure. It's $30 in cash for the entire company. They're saying, give us WBD. Don't even bother with the split into the two companies that you're going to do in Q3 of 2026. We'll just take it all. We'll take all your debt, and we're giving you $30 in cash, equating to an enterprise value of $108.4 billion. That's in their mind better than $27.75 in a mix of cash and stock. And remember, that stock is subject to a collar. And if that stock trades below 97, 91, I think, which it is right now, that 450 is actually worth a bit less than 450. And that only takes the streaming and studios business and leaves the other part of the business to investors as a standalone company. And obviously $30 or $108 billion in enterprise value is higher than $27.75 or $82.7 billion in enterprise value. But again, that assumes that the other part of the business, Global Linear Networks, is worth less than $225 essentially. And I don't know if that's true. It's hard to really put a value on it. I myself put a value of about $225 on it. I've seen some articles that have put a value of $5 on it, but again, at the end of the day, it's all a crapshoot. Once it actually trades on its own, if it ever does, that's when you'll see what the market actually values a shrinking business like that. So maybe that's an uncertainty that Paramount wants to prevent. And at the end of the day, they're giving investors $30, which is not a bad deal. And what are they getting? They're getting everything. You know, they're getting a studio, they're getting the streaming service, they're getting the television channels, the sports rights, all of that stuff. And that seems like a good deal for them. And I think the market agrees, which is why the stock is up this morning after making this deal. And they also claim that they believe that this will be easier to get through the courts and get approved, and it will be done in a more timely fashion, which maybe is true. I mean, given that the Paramount leadership has a relationship with the current president, I think that bodes well for them in that process. They also don't have to wait for the actual split in Q3 2026. You know, at the end of the day, their claim is that Netflix acquiring another streaming service is going to be anti-competitive in a variety of markets, including the US. It's true that Netflix is already a dominant player in the streaming world, and they're acquiring, let's say, the number 4 player in the United States, probably the number 2 or number 3 player in a variety of other markets. That's going to be tough to get through the courts. But on the other side, you're looking at Paramount acquiring one of the bigger movie studios and essentially deleting one of them from existence. You're taking a studio that's, I think, number 4 in market share and having it acquire the number 3 in market share studio to become the number 2 market share studio overall. You know, at the end of the day, is that anti-competitive? The Disney and Fox merger was allowed to go through, and that created the biggest movie studio in the United States. So this would create the second biggest. So if that's allowed to happen, then I guess this is allowed to happen as well. But I also don't think that the other side of the coin, the Netflix merger with Warner Brothers, which retains the studio, which doesn't delete one of the bigger studios from existence, is also not that anti-competitive either. At the end of the day, there's, you know, multiple streaming services out there that are allowed to compete broadly and easily with Netflix. So them acquiring another sizable one isn't the end of the world. And I guess nor is Paramount acquiring another large television studio. So I guess what I'm saying is at the end of the day, I think either of these deals would eventually get approved. So all that really matters is, you know, which deal is better. You can kind of see the Paramount layout here as, we're acquiring 100% of Warner Brothers Discovery versus this complicated deal structure that Netflix has, where with us as a shareholder of WBD, which I am, you get $30 per share and you can forget about it. You don't have to deal with any split shares or collar nonsense that the other offer has. It's more cash in your hand instead of $23.25 for streaming and studios and an unknown value for the global networks business. You get $30 per share for the entire thing. You don't have to worry about the $4.50 per share in Netflix stock. You don't have to worry about the unknown value of global networks. At the end of the day, they're saying that that value is $1 per share, which seems relatively low, but there's certainly uncertainty on that front, whereas with Paramount, you're getting $30 and that's it. So there's value certainty. It's an all-cash proposal for the entire company versus some uncertainty with the Netflix deal. They feel like they have a clearer path to approval versus a much more challenging path for Netflix and a longer date for the deal actually getting done, as in the timing is going to happen within 12 months, whereas the deal for Netflix is going to be longer and has to wait for that split of the two companies because Netflix is only buying streaming and studios. And at the end of the day, Paramount is obviously committed to everything it takes to get this deal done, which, I think, like I said, they do have a better relationship with the current administration. So in that regard, it's potentially more likely to get approved on the Paramount side than it is on the Netflix side, and it will likely take longer. So I can see where they're coming from there. And then just taking a look at the deal numerically over here, when you look at the Netflix deal, they're acquiring just streaming and studios, leaving global linear networks on its own. That's a decent EBITDA business. So, if they're valuing that at $1, that means that it's a 3.6 multiple enterprise value over EBITDA, which is, relatively cheap. Maybe that's the case, but if that's true, then why do you even want it if it's such a terrible business? I mean, I feel like 225 is relatively conservative. So you kind of have an equal value of about $30. One thing to note is that this $4.50 in Netflix stock is subject to a collar. So if the stock trades below 97.91, that means you get less than 450. Right now it's trading at 96.64. That means that at today's prices, if the deal were to happen, and this was the actual weighted value of the stock, you would only get 445. So you're not getting the full 450 that's out there. They're right in that regard. So Paramount's paying $30 in cash. There's certainty there. I have an enterprise value of $107 billion. I'm probably missing some debt here or missing the number of shares a little bit. There's some underlying stuff that they don't really reveal in there in terms of, maybe exercising options and things of that nature that needs to happen. They do have that breakup fee. If Warner Brothers now were to say, we're going to go with Paramount's deal instead of Netflix, there is a $2 billion plus breakup fee that they have to pay. So Paramount would have to cover that somehow as a owning entity of that business. So that's something to keep in mind. I do think the Paramount deal is fine, but I don't think it's any better than what Netflix is offering. I do think there's some value in global linear networks, but I do agree that investors will look at this and say, well, I can get, $23 in cash or $23.25 in cash plus probably around $4.50 in shares, depending on where Netflix trades, and then an unknown number for global linear networks when it spins off in 7 to 8 to 12 months, whenever that happens. Or I could just get $30 in cash. This $30 in cash could be relatively appealing to investors. My question becomes, is this the end of the road? I think due to the fact that Netflix stock is down a little bit right now, the market probably thinks that, hey, this is something that Netflix will have to respond to, potentially increasing their offer, potentially saying that, hey, instead of $23.25, we're going to give you $25 in cash or something like this, and this isn't the end of the story, which for me, as a WBD shareholder, I kind of like that. I like that Paramount is pushing Netflix to do something more, or at least coming in with an offer, bringing it towards the investors and saying, hey, we're going to be there. We're going to be the ones that are more likely to get approval from this administration. You should go with our deal. And that's obviously beneficial for WBD as a stock right now. So what am I doing with this? Well, nothing. Like I said in the last video, I was happy to hold this stock until at least January, before selling it, so I don't have to pay taxes on it in 2025. Because if you were a buyer of the WBD in the last year or so, you're probably up 100 to 200% depending on when you bought it. And at $30, this is a smoking deal for investors, whether it's from Netflix or Paramount, because I think both deals are worth about the same. It's just odd that Paramount hasn't been this aggressive from the beginning. I think their initial offer, based on what I read, was something like $19. Then they upped it to $23.50. Now they're at $30, and it's sort of this negotiating with themselves being too conservative to start that is now making them pay a lot more. The other question I have is for Paramount shareholders. You're taking on a boatload of debt. I mean, Paramount isn't cash flow generative right now. They're getting there. There's a lot of cost savings they have in place. They think the 2 to 3 billion of cost savings they're going to have in standalone cost efficiency after the Skydance merger. They're going to add another 6 billion plus when this merger happens with WBD on top of that. So, at the end of the day, this could be a pretty strong cash flow generative company by 27, 28 when all that stuff happens, if a merger were to happen. But they're going to have a ton of debt on their books, and I don't know if the market's going to love that in the short term. So, if this deal were to happen, would I be interested in Paramount stock eventually? Probably, but I think it would also fall in the short term after the merger happens, as the messiness of a combination like this happens. Look at Disney, what happened to them after the merger with Fox in 2019, was it? The stock has done nothing since then. I don't know if Paramount is going to do that much if this merger were to happen. My preference would be, hey, Netflix come back with a slightly stronger offer, get this thing done, at least force Paramount to counter with something, because right now that Paramount offer doesn't look too bad, and I think the market agrees with me. They feel like Netflix has to do something, which is why the stock is down a little bit more. Might just make Netflix more appealing as an investment, even if the deal doesn't happen. I mean, this has pushed Netflix stock down a little bit. The stock is down quite a bit in the last couple of months, getting to a spot where it's getting interesting. Streaming is the best business to be in when it comes to entertainment and media. Paramount knows that. Paramount knows they have to get bigger. They have to get more scale. And acquiring WBD gets them scale. And that's why they're going all in for this, because a standalone company, they're not going to compete that well with Netflix if Netflix were to acquire WBD on top of what they already have. So it's interesting. I don't like the fact that it removes one of the bigger studios and sort of combines it into one even larger studio. I do wonder if Lionsgate is going to be an acquisition target for somebody. They're one of the smaller remaining standalone studios. They do have a ton of debt, but they're much cheaper than any of these players. They don't have any of the good IP, but if you want to bring production in-house, if you're Netflix and you want to bring production in-house and you aren't able to get WBD for one reason or another, maybe you go after Lionsgate and do it that way, even if it doesn't bring you as much IP as WBD would. So for now, I'm just going to wait to see how this plays out. I'm hoping that there's more offers to be had, and that WBD moves closer and closer to that $30 price point before I dump it, because I don't think this is a stock I'm going to hold and wait forever. I think the wheeling and dealing will play out in the next couple of weeks, the next month or so, and by January, by the time the new tax year rolls around, you're going to know what's happening in terms of who's trying to get approval for their deal. I still think it's going to end up being Netflix, but this Paramount offer is interesting. It adds another little interesting wrench to the works, and we'll see how it plays out. So let me know what you think about this deal, whether you like it more than the Netflix deal. As always, guys, this is not financial advice. I am not a qualified financial advisor. Please do your own due diligence before making any investment decisions. If you like the video, hit the like button, leave a comment, subscribe to the channel if you're new, and as always, thanks for watching. Bye.